Hey, good morning, Curtis.
Hey, good morning, Jeff. How are you, sir?
Very good, thank you. And good morning, everyone in cryptocurrency questions, answers, and news. Today, Curtis and I are going to have a conversation and discuss the market sentiment. And, a lot of people are questioning, is the bull run done? What do you think, Curtis?
Um, well, of course, I'm a little biased. I've always been really interested in what crypto can do long term. Do I think it's over? No. There's some really interesting patterns that are forming on the charts, and of course, the news can always influence that, but I think that some of the news that has come out seems to be bad, but initially bad, but in the long run is really a good thing, and we can talk some more about that. But really, the whole news surrounding China and the cryptocurrency farms, I think, is really good, actually.
Yes. Yeah. Well, I think, the important part is we bring the awareness to the distribution of miners in the world, and so that people can understand the importance of miners and
Hmm.
what they actually mean to the security of the network, right? And when we get on miners and we try to make it illegal for miners to participate in mining, then what we're actually doing is we're creating a security risk for the
Hmm.
miners. And Curtis, you and Gaia Coin are working on bringing awareness to cryptocurrency um, miners and cryptocurrency creators, founders, to be more environmentally conscious and sustainable and use clean and green energy.
Yeah. So to touch on that a little bit, we started late January, and we're still building our team. But the idea is definitely that the environment has become a negative externality where it's actually more beneficial for companies and people to choose convenience and profit over the environment. But with cryptocurrency, there are ways to incentivize environmental action, and also mining, right? Mining consumes energy, and we're in the beginning phases of figuring that out using renewable resources to mine cryptocurrency. So, in the beginning, it's going to be more of testing with other cryptos. And as we develop further into our project, that will, of course, migrate into what we're doing. But hey, for our viewers that don't really understand what mining is, I think this would be a good time to touch on that, Jeff.
Yeah, absolutely. So the thing to understand with mining is that you need a resource. Depending on the cryptocurrency, that might be just a CPU running specific software, an algorithm to do the cryptocurrency um, computation. And cryptocurrency is a cryptography based um, it's trying to use a very simple term. So a cryptography based currency, I guess we'll put it that way. And that it the blockchain is a series of linked and connected transactions that happen in the currency model, and that the link between the in each one of the transactions has a unique number, 1, 2, 3. You get the idea that it's sequential, and that the information is encoded and encrypted into the chain. I'm trying to be as simple as possible. And that each, so for instance, when we're minting, we are mathematically solving a problem to create a new, for instance, Bitcoin or Ethereum. it takes an amount of computational work to create and solve the block. However, it's not being solved by a single system, it's being solved by multiple systems. And the reason that the block is solved by multiple systems is for security purposes, so that multiple systems will solve the problem and then they'll validate the information against others in the chain. And that there is this thing called, it's basically a quorum, that it used to be that you needed a minimum of 51% of the members mining in the blockchain to agree that the number was valid, and then they would commit this computational mathematical model, which would result in a little file segment, piece of text, really, that gets added to the chain. So there's a sequential model information, and then there is the representation of the coin.
Yeah, and just to make it, I think the best way that I've heard it described for our people that aren't as technical, that don't have mining equipment or really know what all of this means, is so running a mining network, you are pretty much processing cryptocurrency transactions. That's the best way that I can put it. And every time your farm processes those transactions, you get a block reward. So that's kind of just wrapping it in a neat little bow. There's definitely a lot more depth and detail to that. But essentially, instead of, like PayPal, it's a centralized thing. There's probably a warehouse somewhere that is centralized and processes transactions. And with a cryptocurrency blockchain, that type of processing is distributed throughout miners that are located all over the world.
Yeah.
And with that being said, it's probably a good time to bring up the whole China thing. So from what I've read, the Chinese government, and they've done this several times, they've come out and said, hey, we're cracking down on crypto. And from what I hear, this time it is a little bit different. They're actually starting to take some enforcement action, but I don't think it's negative. I think that the short term definitely puts some hurt on us, because what's happening is they're telling miners that they're going to have to shut down. But in China, mining Bitcoin, it's these huge, massive operations with hundreds of machines that use up tons of energy, and these are going to get broken up by the government, but they are not going to disallow individuals from mining Bitcoin and other cryptocurrencies. So essentially, they're doing the opposite of what they usually do. Usually it's a forced monopoly of some sorts, but in this instance, the monopolies are being broken up. And some of them have even said that they're moving to North America. So this is all really good for the space, and it causes more decentralization. And that's what crypto is all about, is distributing rewards and responsibilities and making it more decentralized. And so these things in the short term, sound really bad, but I think long term, Jeff, this is definitely great for anybody that's going to be mining, right? Because you have less miners means more reward for the smaller pool of people.
Well, and that's it. And it's like when there's less miners on, to expand upon that, what Curtis just said, is that when there's less miners mining, the complexity of the algorithms reduces to meet the number of miners. So it makes it less complex, and it also makes it potentially more
profitable.
More profitable. Yeah. So the good thing is that, if you are a miner, mining Bitcoin might become more profitable for you. One of the things that a lot of people stay away from mining Bitcoin is because Bitcoin is a single algorithm that can be mined with what are called ASICs, application specific integrated circuits. so that do the hashing or the computation of it, whereas a lot of other systems require the use of graphical processing units, video cards, for
Yep.
simplicity, to do mining on that. So when a blockchain chooses their algorithm, they may choose an algorithm that needs GPU so that it eliminates the ASICs and hence the large Chinese farms. And that's one of the reasons some of the blockchains choose different algorithm, different methods, is so that they know when they're using the video cards that you're going to have more smaller individual groups doing the mining. It doesn't mean that you can't have farms with hundreds or thousands of video cards. It just changes the game a little bit.
Yeah, definitely. And Jeff, another thing that we touched on briefly before we got on the air was the psychological mindset of the market, and how it is human nature for some reason to want to buy when an asset is sky high in price versus a situation like now where it appears that the bottom is in. So, and I said appears, right? Because again, any type of really negative news, you kick somebody while they're down, they're just going to go down a little bit further. But all of the indicators are showing, that the bottom is potentially in. But what you see online is, hey, should I sell? Is this the time to sell? So what do you think about that, Jeff?
Yeah, it's interesting. We all want to do the popular and cool thing. We're all back in high school, if you will, right? So it's, this is the fear and greed index, crypto fear and greed index. You can go take a look at it. We're in extreme greed right now. Like this morning, it touched at 10. So on a scale of 1 to 100. So we're in the extreme fear area. So a lot of this is that fear, uncertainty, and doubt, right? We really don't know what's going on. And we're looking at it going like, oh, and then you've got some YouTubers out there that are spreading fear, uncertainty, and doubt, and they're pulling out technical information, and they're validating their hypotheses, their thesis that the market's over, and that this whole cryptocurrency is a Ponzi scheme, blah blah blah, right? So they're throwing, as I call it, throwing water onto an oil fire. It just makes the flames go higher, and that I think that we really need to stop and check our own feelings in this. Like, if you're losing sleep and you're this really, and you're not feeling well, then you got to do what's right for you, right? There's no one size fits all in this. I've taken it upon myself to go into and really read, study, and understand the Wyckoff method, right? So Richard D. Wyckoff was a very successful investor that came from simple means, and that he lived amongst the wealthiest people in America, right? So he built something of himself. He became a stock runner at the age of 15, which allowed him to do it's like we think about stock currency trading right now, and we're playing with these computers, and we get these wonderful graphs and everything like that. Back in the day, like 100 years ago, they were plotting all this by hand, and all the trades were being registered and done by hand because computers didn't exist to do what we do today. So I think the big thing is that when we're in a fear mode, is we really need to check in with ourselves emotionally. Make sure that we have a written plan. What do we want to achieve from this? If I'm putting $1,000 in, is $10,000 my number? If I'm putting $1,000 in, is $100,000 my number? Whatever that number is, and then have a strategy that says when I meet these certain milestones, that I look and say I'm going to extract some profits along the way. And I'll admit, I'm guilty. Like I extract traffic. I say, okay, I extract my profits. I just pour them into another project.
Yeah.
So I'm not really extracting my profits. I'm just shuffling, the coins around and where they are. And so I think part of it is what this has really allowed me to do is, you're carrying along this big basket of goodies and you're looking at it and you're excited, and then it all leaks off at once. So
Yeah.
that there's 25% of what you had psychologically built, where we're looking at this going like, I shoulda, coulda, woulda, right? And I look at this is a massive education opportunity.
It is, and some of us that have been in the space for a while have seen this sort of thing before. For me, and you're talking about strategy. The way that I see crypto, and I wasn't really around for the whole .com era and the bubble that happened then, but I'm a bit of a history buff, and when you look at technology and how computers came about, and the span of time it took for mass adoption in the electronic computer age. It didn't really hit big for 30, 40 years to become a homemade or a home item, and blockchain is actually being adopted faster than electronic computers. So right now you're sitting at about 10% of adoption in North America, 1% worldwide. So if you look at that in the grand scheme of things, that is a very small percentage of people that are in right now. And for me, it's really a long-term thing. Me and the wife and family, we're not working for an employer right now, and so we don't have of course there's financial options out there for us. Most people would monthly put into a 401k or something of that nature. And for me, looking at crypto as a long-term, very bullish item, I think works for us because I'm not looking to extract any profits anytime soon. I'm looking 20, 30 years down the road when it's time for me to call it quits and just sit on the beach like some of my buddies. Yep. and just enjoy life. So yeah, for me, it's the strategy is just to get involved with crypto, to keep investing in crypto, to believe in it, to teach people about it. And, to me, it's definitely become a passion. And I love every minute of it. Waking up every day and doing this sort of thing has just been awesome.
That's really great. That's really great. And, as we look at the market, that 1% worldwide.
Mm-hmm.
And, if you look at the derivatives market, right? So the derivatives market is in the quadrillions of dollars. That's a whole lot of zeros for everyone out there is wondering what it looks like. And I haven't had $1 quadrillion yet, but someday, maybe. But the idea is that we look at Bitcoin, at $1 trillion. We look at Ethereum at $500 billion, or $250 billion now, and we think, oh, that's big numbers. It's irrelevant numbers, right? So I think that this event that we just had, this bearish event, right, which was totally, it was a market manipulation, and it wasn't just the whales doing this. It was all of us new retail investors responding. Mm-hmm. That's what fear does, right? So they know that to get greed, they put things on sale. So they go in and they, so it's an economics thing, supply and demand. When supply is low and demand is high, the price goes up. We can see it in the, for instance, in the Toronto housing market. Toronto in Canada is one of the hotspots for new immigrants to come in. And the thing that we understand about the new immigrants coming in is they're all they all have wealth, means. That's the first people who get in, right? Because they can bring something to stimulate the economy. And then everyone else who comes in are foreign trained professionals. And everybody's looking, like, if they're coming from India, or right now a lot of the immigrants coming in are coming from India, and the importance of this conversation is that they're coming in with money, and they're used to living in densely populated areas. So the housing, they want to live in Toronto, and there's a limited amount of housing specifically in Toronto. So therefore the price is driven up. And that's what happens with Bitcoin. That's what happens with Ethereum, is that when people are saying, I want to buy more of this, we know that there's only 21 million Bitcoin that can ever be minted and mined. Ethereum is not at a deflationary spot yet, but in July, when EIP 1559 comes in, it will be. So we're looking at this. Everybody wants to buy, right? So, and then the inverse happens. When the whales want to move the market, they just start selling off at lower prices. And it creates this cascade effect. Let's think of the whales in a parable as the Pied Piper, right? It's, they come in and they do their thing, and everybody just responds and follows along. And they call the whales in the Wyckoff, it's called the composite man, right? It's the person who understands the market, and that the market isn't about money. The market is about emotional engagement. And so I think that, when they start playing the game, they know how to play the emotional game.
Absolutely. Yep. And, for some of our viewers also that aren't aware, one of the beautiful things about blockchain and crypto is that a lot of these blockchains are public, and you can see every transaction that happens. So I got to give a shout out to Whale Watcher, which is an automated Twitter feed right now. It also is on Telegram and a couple other places, where there's a certain threshold that once it's reached, it will automatically log and tweet out the transaction. And you can see the whales dumping. You can see the whales picking up large amounts of crypto. One of the things to look for when the bottom is in is usually when there is Tether being printed or USDC being printed, or you see lots of stable coins going into exchanges. And the exact opposite is true also. When you see large amounts of stable coins leaving exchanges, that's people getting ready to cash it back in, or the burns. A lot of times you'll see burns. And also another good indicator is if you see Bitcoin leaving exchanges in large numbers, right? You're, just like Jeff said, you're reducing the available supply that's available to sell. So all of the stuff is public. And again, to add to what you're saying, Jeff, with the dump, the whales, the act of dumping alone doesn't always cause the event that we saw, right. But it seemed to be timed so perfectly. You've got the MACD indicator on Bitcoin was just about to dip into the red on the weekly. You've got Elon Musk that, said some things that, I mean, we just, especially like on Saturday Night Live, and there's things that were said that you, myself, and some of our friends were like, oh my gosh, did he really say that? And then, the China thing, and yeah. That all created the perfect storm. And those whales saw the opportunity to dump a bunch on the market. All the retail investors, not all of them, but a lot of them sold off. So what happened? Those whales let it drop, and when it hit the right spot, they scooped it back up. And you can see it all happen. It's all there, and it's not really a secret, right? You can see it.
That's right. And here's the thing: is that this whole thing about diamond hands and paper hands and all of this, it's again, it's kind of the cool popular thing, and it's like it's trying to encourage or shame people into not making moves. But when we're looking at the market, and this is really important, what Curtis just pointed out, and I want to reiterate that it's the movement of money by large wallets in and out of the crypto space. So when large amounts of crypto are coming into the space from wallets that have been in cold storage, we know an event is coming. And that's why it's important to be aware of whale watch and not just be looking at what's going on. Like a lot of times we look at our favorite crypto and we're doing our technical analysis and we're projecting all of these things. And at the same time, we've got the whales deciding, the composite man, as Wyckoff calls it, deciding when the market should change. And they're also looking at the technicals and seeing, okay, we see things slowing down. Now is a good time to create this massive event. And then you get the sell-off. So there's so many pieces to it. And people selling off near the top, like I think that it's this, like if you can sell off within that 20% of the top, if you take a look at where we are today, you would have had massive gains, right? I mean, losing 20% or 15% versus losing 60% is a big difference, right? It puts you in a position where you can buy back in. Yes, it creates a taxable event. So if you have a shorter term strategy and that's what you're looking for immediate gains, know that you create taxable events when you do that. But that's part of why we're in this. It's like, hey, you know what? I'm happy to pay taxes because it means I'm making money.
Yeah. And, to add to what you said, of course, the ultimate goal is to buy into an asset, to ride it up to the peak, to sell it off at the peak, let it tank, and then buy back in at the bottom. That's everybody's dream, right?
Yeah.
Well, just like you've done some research with Wyckoff, one of my favorite studies is about they gave a monkey a set of darts and had him throw it at different assets to go against the high brokers of the time, and actually outperformed the greatest minds in the market.
Right.
So unless, and this isn't advice, but unless you are highly skilled at reading tech, I wouldn't try that, because I think even if you are highly skilled with tech, timing that sell off and timing the bottom are very difficult to do. And because, especially if you're not one of the big players, if you're not a whale, you're at the mercy of the whales.
Yeah. And it's that buy when it makes sense and it feels good to you. And, always that advice of don't invest more than you can afford to lose, because there's money in the market and you can see big money. You can see multiples. Like, we have a close friend who saw big multiples on a project and, was cool leaving it in there because he believes in the project. Right. And, it's life altering wealth. And it was kind of like, geez, I might have taken some of that out. It's always easier, as they say, the grass is always greener on the other side. It's always easier to make a logical decision when it's not your pot of honey, as Winnie the Pooh might think.
And part of my strategy, Jeff, is there are some assets that I do move around. I have what I call a stagnant group, things that I've invested in that I believe in long term that I will never move, because there's always that possibility that you move it. And of course, the second you move it is when it starts surging, and then you end up buying back in at a higher price. Yeah. So, I've got a split. I've got some things that I do move around to try to catch the waves and try to learn more about the market and do my own experimentation. And then I've got my longer term holds. And for those new people that are also getting into crypto that are just joining us, we talk about learning the mechanics of the market, and the easiest way to do that is with free money. So of course, Coinbase has the Earn to Learn programs, which are great. And maybe that's the stuff that you move around to figure out the market, how it works, and to do your own experimentation.
Yeah, and I think that along with that free money is that if you look at some of the big influencers, they tend to have some of the best referral programs, right?
Yeah.
Where, yeah, sure. Hey, if you use my referral code to join crypto.com or Binance, you might make $25.
Mm-hmm.
But if you use, like someone like BitBoy Crypto, you might get $350 or $400. This, free money is a little bit of a misnomer because you have to perform some actions. You have to put some, I think, the term that came around about 20 years ago is you have to get some skin in the game of your own for them to unlock that rewards, right? So you actually have to deposit funds into their exchange to release the funds. But there's free money is always good money. Right?
Mm-hmm. Oh, another thing. So free money isn't always free either. That's also a taxable event. So
yes. Well, and this is the thing. Anything that creates a gain for us is a taxable event. Anything that creates a loss is something that can offset the tax for us. So when we're in a position where we're flipping assets, like flipping stocks, I like the term assets because it could mean anything. So a cryptocurrency, if we're in a position where there's a loss, realize that loss if you're in a huge gain, and that you need to stay out of that asset for 30 days. So you can't just flip it, realize the loss, and then buy back in, because they realize all you're trying to do is game the system. So, that's where, like, you see the whales do the dump, and then they can't buy back in. And so that's where the market gets drawn out for weeks versus just, a week. So let me get you back in here, Curtis. There you go.
Sorry about that.
That's okay. I've done that myself in the midst of a stream. It's easy to remove ourselves from the stream.
Yeah.
But, so it's like I was just mentioning that, sometimes the market moves sideways a lot because the as Wyckoff calls it, the composite man, and we'll just call them the whales. They manipulate the market, and they have to stay if they want to realize a re-entry point. They're going to play the market for 30 days, for a whole 4 weeks. And during that time, we're going to see a lot of oscillating. We're going to see it jump up, and then they're just going to slap it back down, right? Because they want their re-entry point.
Yeah, they want to. Well, they also want to liquidate the longs and the shorts, right? So
exactly.
They got everybody, and I think what you're seeing now is you're starting to see. I think at about 42,000, tons of shorts get liquidated. So I do see that happening, just because it makes money for the whales.
Yeah, and this morning I was looking at Bitcoin, and Bitcoin was what's the price rate action right now on Bitcoin? I'm just gonna Bitcoin's at 37,500. So we've seen it move up, and we're in the green right now. And as Curtis was discussing, we've seen the weekly MACD flipping, and starting to move positive. And there's some cup action and a few things going on that are indicating, that we had a reverse head and shoulders. There's a lot of things there that are indicating that Bitcoin's going to move up rapidly. How far it moves? Well, at least 42,000, because it's going to liquidate a lot of those short holds.
Yeah, I think something more exciting that I've seen on the charts, and some of you that trade in pairs will understand, and those that don't, a lot of people look at the charts and they'll look at Bitcoin against USDT or another stable coin, so they can, because it's easier to understand that way. However, your pairs, Bitcoin versus Ethereum, those are relative to each other, right? Well, if you look at the Ethereum to Bitcoin chart, it's very bullish right now. So because Bitcoin's already got that reversal pattern in play, things are looking really good. But then you switch over to your Ethereum versus Bitcoin, and you've got the same pattern, Ethereum versus Bitcoin, that Bitcoin has against the stable coins. So it seems to be on a much steeper projection than Bitcoin, just by glance. So.
Right. Yeah. Definitely some interesting times here, and that do what feels right.
Something's going on with the sound, Jeff.
Okay. Is my voice breaking up?
Yes. Yep.
Well, this is probably where we're getting to a good point to wind down. Do you want to do the wind down for us?
Well, sure. Hey, it's a Monday, everybody. New start to the week. New week in crypto. I think things are looking good, and it's always a good time to get into crypto. And if you need anything, you know where to find me, and we'll keep doing these. So feel free to drop any comments. Let us know what you like, what you don't like, any suggestions. And told everybody I'd have that CQAN information out today. And I am running a little bit behind, but I will make good on it. So, excellent. But thanks for joining us, everybody.
Yeah, thank you so much. And thank you, Curtis. It's been a pleasure, as always. We'll see you tomorrow.
All right. Have a good one.
Have a good one. Bye-bye.